because the influx of call buying is historical. We're living through history right now. And I wonder if this is the first stage of the first climb that we saw in the NASDAQ in 98, 99, 2000. I wonder if this was one more push lower to really get the bubble accelerated.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Why trade alone when you can access over 100 years of trading experience right at your fingertips? Simple strategies, proven tools, real-time alerts, and an interactive trading community await. Keep it simpler with Simpler Trading by visiting their website at simplertrading.com and check it out with a $7 trial today. That's at simplertrading.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to another episode of the How to Trade Stocks and Options podcast. Today, we have Jack Roberts from Simpler Trading back on the line, and he and I are going to be talking about these crazy market moves that we're experiencing right now. Jack, what in the world is going on out there?
Chris, good to see you, my friend. Always nice to see you in the mornings here, get rolling on the podcast and talking about the markets. Craziness for sure. You know, we talked about... Oh,
no. I was just going to say that before the episode started, Jack and I were talking about like these moves are insane, right? The NASDAQ could be up 2% in the morning and then down 2% in the afternoon. And it's like, what I said to him was, these are not bull market moves. These are bear market moves. And he started laughing. And I'm like, well, hey, wait a minute. Maybe he knows something I don't know. All right, Jack, lay it on me.
Yeah, let's do it. Let's go down memory lane for the past 5 days. And if you look at a 15-minute chart on the NASDAQ, it clearly looks to me like we are just continuing to entertain is a good word, entertain the retail trader. And what's happening is market makers and hedge funds, and there's a small difference, right? And we'll talk about that here in a second. Market makers are having to continue, and I see this happening through 2021 too, is maintaining their gamma, right? So every time you have retail traders buying out of the money calls or going hard and heavy into some Delta 70 calls, each market maker, every time that stock goes up, they have to buy the stock because they have to maintain and hedge their gamma. So what's happening there is that's causing these huge 200, 300 point moves in the NASDAQ on the intraday and overnight, because what's happening right now is a lot of give and take. And it reminds me of something that we did at Simpler Trading last week. We had an open theater at the movie theater showing of Gladiator just to get together. It's been a while, right? Quarantine, social distancing. So we're just being careful, but it was nice to see everyone. And the whole time we were watching, Gladiator, that movie that came out whenever we were younger, right? Epic movie. Yeah, I couldn't stop thinking about the stock market. Now I'm biased because I'm a trader and an expert in my field, but there's got to be a saying, and I came up with it. This market is for professionals and gladiators only, and I say that tongue in cheek. It's just kind of one of these things where, last time we talked, flight to safety was FANGs. Flight to safety could be bonds, it could be gold, but that also is shaky territory. And what's challenging about this market and fun about this market is you have so much volatility that the options market is just, in my eyes, I couldn't think of a better time to be jumping into the options market. And, even better if I was just watching my position size and the best way to grow an account right now is just small position size because the volatility is there. And what I'm getting at is we have so much happening. I wonder if we haven't even started to see the bubble pop, right?
Okay. All right.
Right. So I'm gonna challenge the status quo because there's something to be said for the moves, and I wonder if all this government buying that I talked about in the first and second podcast with you, I wonder if that is even kicked in yet. I think what we're seeing is actually the market makers continue to heavily maintain their gamma and their positions because the influx of call buying is historical. We're living through history right now. And I wonder if this is the first stage of the first climb that we saw in the NASDAQ in 98, 99, 2000. I wonder if this was one more push lower to really get the bubble accelerated. And if this isn't a prediction of right or wrong, this is just an observation. It could totally tank, and we could totally fail the 21 EMA, and we could totally, for the next month, maybe just see a lot of back and forth chop, kind of looking like a bear market beginning. But I'm of the mind that one, the election coming up will just be volatility and we will not completely tank. Two, we've priced in a lot of the election already. And also, I don't think that it matters who we put in office. The market is not going to care. And I'm going to continue to say that. I'm totally open to being wrong. I spend so much time on this, and I wonder if the market is not only just going to not react, but that is where we will continue to have this, nonsensical, doesn't make sense, not calculating. You can't really put your finger on it, and then we just continue to attract call buyers. And then that's going to cause the cycle again. It's nuts. I'm excited about it. It's like, it's my favorite thing.
Okay. You got a lot to unpack there. So let me back it up real quick. So when you're talking about gamma, right? So what do you mean by that, right? So especially for the more novice investors who are listening, right? You're talking about how everybody's buying calls, and maybe they are some of the people who are out there buying calls, right? What gamma? What in the gamma are you talking about?
So whenever I say that, that's just a fancy word for like maintaining a position over the long term of being like market maker's job is to create the market and make sure there's enough liquidity, not only in the indexes, but what we've seen like Zoom, Beyond Meat, Peloton this morning could just go, psh, right? And what's happened, what that is just basically saying that for market makers to keep up with the influx of volume, they have to continue to buy the stock. And if they don't buy the stock, then obviously the call buyer is just going to take all the market makers and hedge funds money, but they can't allow that. There has to be a market. And so basically it's a highly technical way of saying that there's just back and forth give and take with the amount of buying from the retail trader and the amount of sacrifice that the market makers and hedge funds have to bring into the market and make sure that they can equally keep up with the amount of retail trading by buying stock, because market makers, hedge funds, they're not buying $1 billion worth of call options because they can't. They are merely stock entities, right? And hedge funds can do whatever they want to do, but market makers in general are continuing to buy the stock on every push down, and we see rotations naturally in the market. And every time we see a rotation out of tech specifically, Apple, Microsoft, Netflix, Google, Amazon, Apple. Yeah, I don't know if I said Amazon there, but those big names that are carrying the market, if that sees a rotation, the market makers go, okay, this is where we cash out too. And this is where we can also buy some more to cover, or forward looking, what did we learn from last week? It's just like, as a retail trader, I think the basic principle to understand is the market makers are doing their very damn best to create and continue to create liquidity, because there is money to be made all over the place, and hedge funds know this, different capital entities know this, and this is going to be, I think the tailing end of this volatility that we'll see is probably in 2022 or 23.
Oh, wow.
So not only do I have a long-term kind of prediction, exposure, however you want to call that, but I also don't think that there's going to be a huge decrease in volatility. That's not to say that we won't have a few stages of quiet time, but I think that it's safe to say that there's going to be continued volatility for the next 2 years. I mean, unless something drastic happens, right? There's always the outlier.
I think that a lot of people got complacent with the market only going up, right? So we hit our bottom in March, and then it was like, especially in NASDAQ. It was up 75% since March. And it's like, how many days is that, right? Close to 75 days or so, probably, trading days at least. And it's like, so I guess I could just expect to make 1% a day, right? That's just totally normal. That's how stock trading should work. Stocks only go up, and I'm being sarcastic. Please don't take that as financial advice. And because it only goes up, then I can just buy all the long calls I want, and I'll be fine. And then last week happened, and things just kind of fell apart. I've been doing really well. My trading had been on fire, hitting new all-time highs and everything else. And then we started having those reversal days, and I got out really quick. I started going short a little bit, and that did fine. And now I'm all cash at the moment. I got suckered in a couple days ago too with the move up, and then on yesterday's move back down, I'm like, all right, I'm gonna cut my trades here real quick. So I at this very moment am all cash, but as you know, that can change by the hour. So
well, I'm glad you said that, because it brings up my next little window. Let's talk about what happened on Friday, and then just run through what happened this week following this long weekend that we had. So on Friday, I have family members that I love and other retail traders that texted me, and I wish I could show you the text like through here. I don't, things like family members, they're like, hey, I bought AMD and Tesla. And I said, hey, this was the wrong way to do it. This is the wrong day to do it. And they're like, bummer. And I said, the day to buy will be Tuesday. And so we flush on Friday, and every retail trader is just like, what's happening? I thought I was buying the dip, Thursday, Friday dip.
Yep.
Monday we're closed. Tuesday we come in and we tank. Okay. Right. So then you go, okay, those existing positions from Friday in AMD or Tesla, which are great examples actually, they continue to go through. And then on Wednesday, we have a huge up day, 400 points on the NASDAQ. And then what happens there is whoever held on to their position from Friday was like, oh, thank goodness, I'm going to get out for a small loss if they held. But what happened was the majority of those holders had to get out, because there's so much fear in the market whenever something like that happens. But what it did was also on the other end, on Tuesday and Wednesday, that pullback brought in a ton of that call buying that we're talking about. But that was the double head fake. And yesterday and overnight today, we are getting not only a moderate flush, but this is a prime example of the market bringing in retail traders on this hope that they're buying the dip and crushing skulls, right?
Yes.
Like, and it's not, I'm not trying to throw out declarative predictions. These are observations. These are real-time observations. So I wouldn't be surprised if we grind higher today, because we have ripped out all those existing optimistic positions.
Yeah. And buying the dip and stuff, like, I don't know how many like trading books I've read, but they're the opposite of like the Warren Buffett approach of buy low, sell high, right? I don't buy the dip. When it crests a moving average or goes, like it shows strength, that's when I'm buying. I am not buying things when they're socked down. Like if it recovers and makes a couple moving averages or something like that, then I'm looking to go in. But like anyone who says buy low, sell high doesn't understand the trading, right? Like they literally think, oh, I'm going to hold the stock for the next 75 years. And of course it'll go up, and I'm sure it will. But you don't have to fight that battle. You can just wait until the tide's working in your favor. So yeah, that's
this is why I love you, man.
There's a TP moment right there.
Yeah, this is why I love you, because this is what happens is if someone asked me what were the most successful positions of not only my week but my year, I've had a pretty good past 60 days, just clearing 60K in 60 days. And to a lot of people that may not be a lot of money, but I'm trading multiple accounts, and this was a small account that I was growing since July 7th. And I would tell any beginner trader or anyone that's interested in what I'm doing, non-directional plays, strangles on the Qs. Doesn't matter where your strangle is. It could be on the NDX, SPX, anything like that. And then also if you wanted to play long calls in high beta stocks like Peloton that we're about to see quite possibly rip past 100 this morning post earnings. The strategies I'm involving are low risk, like butterflies. We've talked about this before. Great if they work out. No big deal if they don't. You're buying it for a small debit. With strangles in the queue specifically, that is one thing that I would be focusing on today, because we are going to probably have another either severe pullback, or we've already seen it, and the buy the dip was something that maybe is going to be well rewarded next week. There could be another push higher. It would actually make sense to push higher next week and grind higher this morning.
Yeah.
But I'm telling you, man, there's so much volatility that non-directional is, as comedian Tim Dillon would say, that's the move.
Yeah. I got burned so hard earlier in my trading career on iron condors. Like I thought that was like it's a can't lose strategy, right? It can go up, it can go down, or it can stay where it's at. But then I found out that no, it can lose, and it can lose really bad if you have no idea what you're doing, which I didn't. And when I did the analysis on my portfolio, I found that 90% of my lost dollars came from iron condors, and I'm like, okay, there's something to this. So I only play one side, right? Like I'll sell put spreads all day when a stock is strong. So in what you're discussing there, like I would be very interested in selling some put spreads. However, right, looking at a chart, like everything, at least last time I checked, I mean, it's been a full day. It could be anywhere at this point. But the last time I checked, everything's like below its 10 and 20 day exponential moving averages. And to me, those are where the strength is at. And if it's not above that, I'm definitely not selling put spreads. So yeah. I mean, like, are we looking for the market to open up higher or lower? I can't see a chart where I'm at.
Well, we're pretty much just kind of moderately up. This is I wouldn't be surprised, like I said, if we just open up and we flush down. Maybe the NASDAQ hits 11,100, so that'd be a 150 point blip, which would open us up 100 points down in the NASDAQ. It's interesting to see, tech is like its own little stock market, and then you have these high beta stocks that are just like, they don't care if, like Chewy yesterday, we had tons of calls and we were selling put credit spreads on Chewy.
Chewy, the like dog food place?
Yeah.
What is this? Is this like pets.com 2000? What's going on here, Jack?
Hey, you said it. So they had earnings, and what I did was I bought, second deviation iron condors around earnings. That's another way to go about it. Because the expected move is such and such, and if my legs are outside the expected move, like I said, there's free money in the market, and that's attractive to retail traders. Any retail trader or beginner trader that knows that is probably positioning themselves appropriately around that.
Yeah.
It's such an interesting market. I would say that, the non-directional stuff can be rewarded. Second deviation wide iron condors. Yes, you pay more for them, but you know what? At the end of the day, yes, we're seeing second deviation moves, and you put yourself in kind of like a situation where it could go wrong. But you just two things you have to be in this market right now to trade iron condor successfully is you got to be super picky with the underlying, and then super picky with duration, time duration. I'm usually I'm doing very, very short duration iron condors. Like my iron condor that I put on yesterday expires today.
Oh, okay. That's even shorter than me, man. I've been trading 7 days out, like on everything for a while now, just because of these kind of moves, right? I used to trade, 30, 45 days out. And like half the time I trade 45 days out because that's the quote safe bet. And then, it goes in the money and it loses and it sucks. And it's like, you know what? If the trend's up, I don't see any reason why I can't go shorter term and just go with this trend that's working for me versus waiting for it to turn around in the next month and a half. So yeah, I get that.
I get that. I think a lot of people maybe that started out with Tastyworks kind of goes, okay, that 30 to 45 day pocket statistically it's interesting, right? And every time that I talk to Tom Sosnoff, it's one of those things where I admire the approach to the market with that. I admire the statistically proven higher probability trade. But I'm very careful not to limit myself to those durations because the volatility can make you want to close out that position. Let's just say, right?
Yeah, without a doubt. I've written a short guide on how you can use the triple stock profit system. It's the secret weapon every investor needs right now to change your financial future, and you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter. Now, Jack, I know you got to go make some money on this market today. I only had you for 20 minutes and we reached our time limit. Jack, I tell you, every time we talk, it's just like time flies, man. So I appreciate you making some time for us today.
Yeah, I appreciate you too, Chris. And let's go longer next time. What do you say?
You know what? You make some time on your calendar for me next time.
Yes, sir. All right. You know what? We're gonna tack on 15 minutes.
There you go. All right, that sounds good. Well, Jack, I appreciate your time. Make sure everybody goes and checks out Jack over at simplertrading.com. And really, thank you so much for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss. We upload more tools, tips, and tricks, and have interviews with people just like Jack every single week. I'll see you on the next episode.